Thank you so much, and it's my absolute pleasure to be here in Singapore today with you. I have an extremely distinguished panel with me, so I'm honoured to be moderating this discussion. I'm Emma Joyce. I'm the CEO of GBBC Digital Finance. We're the largest digital assets members association in the world. Today, we're going to be talking about the development of digital money and looking specifically at CBDCs and tokenized deposits. So a really interesting discussion coming up. I'm going to ask my panelists to now introduce themselves before we get into the conversation. Suvendu.
Hello, good afternoon. I'm Suvendu from Reserve Bank of India. One of my responsibilities is, of course, central bank digital currencies, as well as the FinTech framework and the innovation initiatives. Very glad to be here. Looking forward to.
Okay, hello, I'm Bessho, Masaki Bessho, head of FinTech Center at the Payment and Settlement System Department at the Bank of Japan. And I've been serving this function from 2021 and responsible for the innovation for the Bank of Japan. But in tandem with such responsibilities, I've been engaged with our exploration on CBDC. So I feel quite happy with it today.
Hello to everybody. I'm Giuseppe Zingrillo from Banca of Italy. I'm the CIO of Banca of Italy. And as you may know, we are a service provider in the Eurosystem context for the main settlement platform in Europe, namely Target2 Securities, TIPS. We are quite involved now in the CBDC, in the retail CBDC project of the Eurosystem. We are actively working on the tokenized wholesale CBDC perspective for the future of the target services. And finally, I have to say we are really active in the cross-border environment under the umbrella of the roadmap on cross-border promoted by the BIS and the Financial Stability Board under the umbrella of the G20.
Good afternoon. I am Dong He, Deputy Director of the Monetary and Capital Markets Department at the IMF. I have oversight responsibility for the department's work on digital currencies. So I'm very happy to be back at the Singapore FinTech Festival. Thank you.
Thank you so much. I think we're going to start taking a look at the projects in the different countries. And Giuseppe, could I start with you, please? And would you tell us a little bit about the projects and what you think the future outlook in your region is?
I can say that, at the Eurosystem, we started this project in 2021 with the so-called investigation phase. The project is related to a retail CBDC. So I would like to spend a few words on trying to clarify the motivation behind this decision to starting this project. I think that we can consider at least three main motivations, at least from a central bank perspective. Then we can discuss also about the consumer perspective or the merchant perspective. From a central bank point of view, I think that the first motivation is to maintain the role of monetary anchor that the central bank money has in the two-tier monetary system. In particular, in a monetary union like the Eurosystem, which is composed by 20 central banks of 20 different countries that decided to adopt the euro as the national currency, the role of the anchor is fundamental because you must be sure that 10 euros in a bank account in Greece are exactly the same 10 euros in a bank account in Germany. And this is so because they can be converted in 10 euros of cash. And these can be spent in Belgium, in Italy, in Spain, and so on and so forth. So what happens when cash is becoming less and less important in the monetary system? Because, of course, you know that cash is only suitable for proximity payments. But now, e-commerce, payments, digital payments and points of sale are prevailing. So the role of monetary anchor is less and less effective. So this is the first motivation. You need a digital form of central bank money for the digital world. The second point is related to a specific peculiarity of Europe, because we do not have a unified infrastructure for digital payments. We have many local different infrastructure, but there is no a unique infrastructure for digital payments that you can use in every use case, from person to person, on e-commerce, on point of sale, on X to government, and on the other direction. So this is quite important to provide the Euro system with a unique infrastructure and a seamless user experience. The third motivation is related to financial inclusion, because you know, for unbanked people, cash is the only way to spend, to pay, but of course this works only for proximity payments, and it's not enough.
Thank you so much. Masaki, could we move to you next, please, and what the Bank of Japan are currently exploring?
Yeah, sure. On wholesale, on CBDC, actually we are interested in both wholesale CBDC and retail CBDC. And on wholesale CBDC, from 2016 to 2020, we carried out a joint research project with the European Central Bank, that is Project Stella, focused on the potential of distributed ledger technology introduced into the large value payment system. The series of reports that Project Stella cover not only fund transfer, but also delivery versus payment with securities, and also multiple currency payment versus payments, and also privacy enhancing technologies. And also on retail CBDC, we have accelerated our explorations on retail CBDC from around 2019, and in 2020, in October, we published our approach on CBDC. And at this moment, we do not have immediate plan to introduce retail CBDC in Japan, and it should be subject to a national decision supported by the general public to introduce CBDC. However, the digitalization of the economies or the society is progressing so rapidly, so it might be the case in the future the society requires the introduction of CBDC, and we should be ready for such eventuality, and we should make efforts to explore the potential of CBDC. And our explorations include both technical aspects and institutional arrangement for possible retail CBDC in Japan. But on technical aspects of CBDC, we started the proof of concept from 2021, and the proof of concept was completed in March this year. And for the 2 years proof of concept, in the first year of this project, we focused on the core ledger of a CBDC system where the holdings of CBDCs are recorded. And in that phase, we developed 3 test systems and compared the performances and the characteristics of each of design models. And in the second year of our proof of concept, on top of the system developed in the phase 1, we deployed some additional functions, for example, safeguards to the financial stability. That means, for example, caps for holdings or caps for transactions or remunerations. And in addition to such experiments, we carried out some desktop verifications on the privacy enhancing technologies or alternative data models or alternative database solutions. And with the successful completion of the 2 years proof of concept in March, from this April, we stepped into the new phase of our exploration, that is pilot program. Although the pilot program does not involve live transaction, we have expanded the scope of the experiments and also the scope of the parties which are involved in the experiments. And the pilot program has 2 pillars. The first pillar is development of a brand new CBDC prototype within the BOJ, and the second pillar is launch of CBDC Forum, where we invited practitioners and engineers and experts from the private industry. And both of these two pillars are interactive. And in the CBDC Forum, we have set several subgroups which will focus on specific issues. For example, KYC procedure, or the development of CBDC ecosystem, or the conversion of CBDC with other forms of money, for example, bank deposits. And we have had lively discussions with the practitioners of the private sector, and so far we have learned a lot from them.
Wonderful. Thank you so much. And Suvendo, please do tell us what's happening in India.
Yeah, so as everybody would be knowing, we in India started the retail CBDC pilot, which is going to complete about 1 year on the 1st of December 2022. And on the wholesale segment, we started the pilot on the 1st of November 2022. So let me give you an update where we stand today. Today we are at, in the retail CBDC front, we are at 2.2 million users, 0.35 million dedicated merchants onboarded onto the CBDC framework. And the pilot, which we started with 4 banks and 4 cities, is now expanded to 13 banks across 80 locations in India. On the wholesale segment, there are now 9 participating banks which are part of the pilot, and the use cases that we have tested so far are the secondary market settlement of the G-SECs with the funding in CBDC, and now sometime back we expanded the use case to the interbank call money, the borrowing and lending settlement through the CBDC. This is the broad overview where we stand. And what are the key motivations for a country like India to start this is obviously to move towards a less cash economy. Despite significant digital transformation that is taking place in India, we still are a country which is having high cash usage. The current the currency to the GDP ratio still hovers around 13%, which is pretty high. Over the period of time, we would envisage to transform or move to a less cash through the digital adoption. Also with an objective of future-proofing our monetary system. Everything else is going digital. Around 130 countries are exploring around the world, and this is something that we should be preparing for the future from now on. Our third objective, which we clearly see as a very big possibility for the CBDC to have, is to bring efficiency to the cross-border payment systems, and which is typically now affected by 3 challenges: slow speed, high costs, and lack of inadequate transparency. So we believe this technological solution in the form of new money, it provides a window for addressing some of these challenges. What has been in India, the CBDC design is, it is non-remunerative, it doesn't carry interest, and we are positioning is as close as to the cash. Secondly, it is a distribution model that we have chosen for the pilot is a 2-tier distribution model with the central bank creating the tokens and issuing them to the participating banks, and the banks are distributing these wallets to the ultimate customers. And thirdly, we are now, the current focus of this pilot is to see that the scaling of the transactions happens so that we are in a position to test the tech infrastructure, the tech capabilities, and which will test our resilience in terms of preparing it for the future launch whenever that is decided. I must add that we first carried out the legal changes before we introduced the CBDC pilot, so that it is a legal tender having adequate backing, and we are going forward, we would like to test the features of offline functionality, which is a key motivation for India in terms of extending the financial inclusion space, improving access. We are also looking at introducing the programmability feature to the CBDC, as well as we are extremely sanguine and hopeful that on the cross-border space we will start some experiments. In fact, we have already entered into an MOU with the United Arab Emirates, and we are in engagements with them to start either the bilateral or join some of the multilateral platforms to see how we can translate or reap the benefits of this new technology to bring efficiency to the cross-border space. I'll stop here. We'll discuss it further as we go along.
Brilliant. Thank you so much. And some incredibly exciting projects going on, an awful lot happening. I want to take a look from a bit more of a global perspective now, and this question is for Dong. What do evolutions in financial digital infrastructure, such as those for payment rails, tokenized deposits, and CBDCs, mean for the structure of the global financial system? And do you think this will lead to more integration or fragmentation of the international monetary landscape?
Thank you, Emma. So as you know, this is a group of central bankers. And in the audience, there are entrepreneurs, there are crypto assets issuers, stablecoin issuers. Of course, in the past 15 years, we have seen a lot of progress in digital technology. And the central banks certainly don't want to lag behind. That's why you are seeing that central banks are taking all these initiatives to experiment with central bank digital currency. But if we look into the future in 5-10 years' time, how would the global financial system look like? I think it's up to us to shape it. It's not only technology, but it's also policy choices that would shape the future of the global financial system. But what I think we can see from now is that it's going to be a system that still has a lot of different instruments in the system, but with central bank money as the foundation. So central bank money is the monetary foundation of a modern system, modern economy. All the transactions, all economic transactions, financial transactions are ultimately settled in central bank money. And the central bank money, of course, defines the unit of account of a sovereign monetary system, right? So in the future, that's not going to change. That's why central banks need to provide the monetary anchor in a digitalized financial system. But on top of that, we can still see the two-tier system intact in the sense that there will be commercial bank money. Most of us keep our money as commercial bank deposits. That's not going to change. But probably it's going to be tokenized in the sense that we can hold these deposits in digital wallets. They can be easily traded, easily converted into central bank money. And we can have well-regulated stablecoins, which are very easily used across borders. But we can also have digitalized or tokenized financial assets, bonds, equities, and other financial assets. So it still has all these financial assets in the system. But the way these transactions take place will probably look different. I think it will be a global system that's much more inclusive, that's much more efficient, and the intermediaries may play different roles. Think about how tokenized assets will change the way financial market infrastructure work. The need for centralized security depositories probably will be less so. There will probably be no need for securities settlement systems, since we can achieve atomic settlements between assets. And the foreign exchange markets will probably look different. Instead of over-the-counter bilateral trading of foreign exchange, we probably have concepts like liquidity pools, automated market makers. These are the concepts drawn from DeFi world. And you can see the mainstreaming of these kind of models using central bank digital currencies, using tokenized deposits, and using tokenized assets. So it's going to be a system that's much more efficient, hopefully also more inclusive. Are we going to see more integration or fragmentation? That's actually hard to say. Technology itself is probably neutral. It's up to us to shape the global financial system so that we don't end up with siloed networks. So we need to have public policy in place. We need to have international collaboration to ensure that these different networks are interoperable by design, so that small firms in different countries in Africa, they can continue to trade with firms in Singapore in a very seamless way. And those families, those households that are not included in the global financial system will find it much easier to send remittances, for migrant workers to send remittances back to their families in Africa, from UAE to India. So that's going to be really up to us to make policies so that technology can really be used for public policy objectives to achieve welfare improvements across the world. So let me stop here and we can come back to some of these points. Thank you.
Absolutely. Thank you so much, Dong. I want to talk a little about the risks, and if I could go to Suvendu next, please. Can you tell us a little bit about the risks that are involved in CBDCs and what are you doing to navigate them?
Yeah, glad that you asked that question, but I would like to differ the phrasing of the question in the sense that it's not so much of a risk as such, but we could phrase it as some of the challenges that it throws at us. Of course, central bank digital currency with the central bank money at its anchor, it is the safest form of money. But in the digital form, there would be newer challenges that one may have to navigate. As far as I see it, we see it in India, as long as it is a pure substitute of the currency or the cash, there are possibly no implications for the banks, there are no implications for the monetary policy. But as long as, and that is why in our country, for example, we have decided this to be non-remunerative in design, and so that it does not also replace the bank deposits. So the possibility or a potential of bank disintermediation is minimized or ruled out almost to negligible limits because of this design structures. So what I would like to add, although there could be some challenges in terms of this disintermediation or even anonymity or those kind of adoption risks, there are designs or the policy choices available to mitigate them. And all our efforts, all central banks, technology providers or private sector should be revolved around how do we address them. It is possible, for example, in if you are talking about bank disintermediation, we can have the limits, holding limits, transaction limits, and in the times of stress through technology, all these rules can be implemented. So it is not so much of a risk, I would say, but there are some challenges newer form of money would bring, and there are mitigations available to address them. And all our efforts should be in that direction instead of adopting the more riskier forms of private money which is doing the rounds. And when central bank is the anchor, that is possibly the way to go forward. I'll stop here.
Thank you so much. And sticking with challenges, Masaki, are there different approaches to retail and wholesale and different ways of looking at the challenges?
Yeah, I think I'm actually on the same line with Vendu, and the guiding principle which will frame this kind of discussion is, as Giuseppe and also Don have already mentioned, the maintenance of two-tier monetary system, and within that framework, how we could ensure coexistence of public money and private money, and how public money could continue to function as an anchor of value for other forms of money. And because one of the benefits of the two-tier monetary system is we can leverage private resources or private initiatives for the allocation of financial resources within the economy by the credit creation mechanisms or banks' issuance of private monies to the economy. And this function of banking should be ensured even after the emergence of new forms of money. And I don't know to what extent CBDC either retail CBDC or wholesale CBDC could be a game changer in this diagram, but so long as there are some uncertainties around the possible impact of CBDC for the deposit taking of financial institutions, we should avoid some kind of mechanism to mitigate the impact of excessive take-up from the bank deposit to CBDC. So in our exploration of CBDC, we have been discussing we'll need to introduce some kind of safeguards for the financial stability, and this kind of safeguards could include typically caps for holdings. So in the phase 2 of our proof of concept, we have studied the technical feasibility of such holding caps, and the experiments also includes privacy enhancing methods of applying per person holding caps, even if they have multiple CBDC accounts with different intermediaries. And also, wholesale CBDC, we will need to consider how we should set the access policy, not only within domestic landscape, but also within the international perspective. So that kind of discussion might be important for the effectiveness of the monetary policy implementation. However, having said that, the introduction of CBDC might be justified by the discussion around the two-tier model and also on the central bank's function as a monetary anchor. Yeah, in Japan, so far, cash has been effectively functioning as a means of payment, but in some jurisdictions, because of the decline of cash usage, it's no longer the case. So in these scenarios, I think it might make sense to introduce CBDC to supplement cash function as a monetary anchor for other forms of money. I'll stop it.
Thank you so much. Giuseppe, a challenge I see is actually getting citizens to accept CBDCs. So, looking at, I guess, retail consumers and their concerns, particularly around privacy, how, A, do we address that, but also do consumers understand that privacy will be embedded into CBDCs? Is there enough education? And do they actually understand the benefits that will come?
Yeah, this is a very tough question because, of course, it's really important for the success of the digital euro that it will be quite accepted by the people. So the point is, what are the advantages for the different classes of stakeholders? We can schematically say customers, merchants, I would say intermediaries, and treasuries. For customers, of course, as I mentioned before, there is a possibility to have a unified form of digital money that can be spent in every use case, both online and offline, to the point of sale, to the e-commerce, and of course for person-to-person payments. From the merchant point of view, I have to say that taking into account that the euro system has already decided to bear the cost of the back-end services, so the settlement services, but also the cost of the payment schema will be sustained by the euro system. This, in principle, will lead to a lower merchant service fee for digital transaction, and this will be, I would say, an advantage for merchants and, of course, an indirect advantage also for consumers. For intermediaries, I have to say, as it was clearly stated by the Governing Council of the Euro system, the digital euro is not meant to be a store of value. The digital euro is a means of payments. And apart from the threshold that we'll be implementing on the holdings, I have to say that there have been designed also automatic funding and defunding mechanism, because each CBDC, each account in digital euro will be connected to a standard banking account, with automatic possibility under two mechanisms named the waterfall and reverse waterfall, but I don't want to enter in detail, but there is automatic funding and defunding. So you can make a payments which exceeds the threshold, and you can receive payments that exceed the threshold, and automatically the excess funds are moved to the banking account. So no risks from this point of view. There is no risk of displacement of banking accounts, but intermediaries can create value-added services on these new payments mean, which will be universal, at least in the Eurosystem area. So this is a sort of rails on which the intermediaries can provide new and value-added services. And finally, let me say that it's also important for treasuries, so for government, because you know, from a seigniorage point of view, if cash is no more so spread among the population, the CBDC and the digital euro would be a new source of seigniorage for treasury. So, hoping I've answered your question.
Thank you. Yes, so much. And I know, Suvendra, you wanted to jump in.
Just quick points on the privacy issues and all that. Because we are positioning this as as close to the cash, the adoption is critically hinged on the level of anonymity that this new digital form of money provides. It's also quite challenging to maintain that degree of anonymity in a digital, all transactions would leave some digital trail. But there are also technological solutions that could possibly be available to address these issues. One is either you delete a transactions after a particular threshold of time, leaving some time for addressing the customer grievances. You could also make the database encrypted so that it is not available readily or readable. But all those technical measures also need to be backed by the legal system, legal protection, whereby the authorities would not be empowered to seek these transaction level details. The banks or the wallet providers would have the wallet level balances details, like you go to ATM, you draw your cash, after your cash, whether you spend your money on the ice creams or on the coffee, nobody knows. So same degree, like in a wallet, once you withdraw, what happens to those subsequent transactions, nobody should know. So that kind of legal framework, giving some exemption through the legal backing, is also possible to ensure and bring certainty to the minds of people that nobody is snooping on their behavior or the transactions. So there are possibilities which are there and which should be provided. There are other opportunities, for example, in terms of programmability and other concepts which will address the make the money fungible. Like he said, both way loading and redeeming the transactions to your bank account. So two-way, the fungibility also and interoperability with the existing payment systems. These are also the things on the works. So we are pretty sanguine that there are possibilities which can drive adoption, provide the store of value, instant settlement for the merchants. Yeah. That is another use case where the CBDC's adoption could be a game changer. And as long as there is the CBDC provision becomes competitive because the payment systems would be charging something, whereas this system, as the sovereign responsibility, you would be providing free, there would always be that kind of advantage in the digital form of money. So there are multiple use cases that can get developed. Brilliant. Thank you.
Thank you, absolutely, and those use cases are terribly important. We've got 5 minutes left, so time for one more question. I'm going to go to Dong, and I know we touched on this earlier, but given the global way of digital money, how important is that cross-border coordination?
Thank you, Emma. I think this is an extremely important question. Digital technology actually provides really a rare opportunity to fix cross-border issues. We know that cross-border payments have been, particularly involving developing country corridors, slow, costly, opaque, and not particularly accessible to many households and the firms. Now, if you remember, in June 2019, the idea of Libra, a global stablecoin, that was really really that's a trigger for central banks, for the global community, the policy community, to gather together to have a concerted effort to fix problems in cross-border payments. That's why the G20 roadmap to enhance cross-border payments came into being. And of course, the development of central bank digital currencies, possibly well-regulated stablecoins, provides really a good opportunity. So in addition to addressing existing market frictions, under the G20 roadmap, we have action points to fix problems like payment system interoperability and the extension, the legal, regulatory, supervisory frameworks governing access to payment systems, for example, how, under what conditions non-bank service providers can be admitted to central bank run payment systems, and of course also standardization of payment messages, the adoption of, for example, ISO 20022, so this kind of standard for messaging systems. In addition to these efforts to addressing existing market frictions, how do we feature an international dimension in designing central bank digital currency? That's an important effort as well. So that's why you see efforts of central banks coming together. There are projects hosted by the BIS Innovation Hub, for example, to connect retail central bank digital currencies like Project Icebreaker out of the Nordic Center of the BIS Innovation Hub, and Project Mbridge out of the Hong Kong Center, and of course Project Damba here in Singapore that's superseded by other projects. These are all efforts to think about what are the new ways to do cross-border payments. In this effort, very close collaboration between central banks would be crucial, really to get the design right and eventually to scale them up. So we need to have these networks that are really open. We hope, certainly from an international monetary policy, international monetary system point of view, we hope as many central banks will join these efforts as possible, so we can scale them up. We have platforms that are really, have members, including central banks from developing countries. That would be a game changer for the global financial system. Thank you.
Absolutely. Yeah, we have got 1 minute, yes.
Oh, just to complement what Dong has just said, in saying that we are actively working in this roadmap of the Financial Stability Board and BIS in particular on 2 building blocks that were recalled. Building block 13, which is related to interlinking of fast payment system. For instance, Nexus was also another huge opportunity for this, but also on building blocks 17, which is related to the establishment of a new multilateral platform, so a multi-jurisdictional platform like Mbridge is, which is quite promising, I think.
I think just jump in 30 seconds, taking the cue of Dong's presence here from IMF. I think it's institutions like IMF and the BIS that should lead this space into the designing the interoperable multilateral bridges or platforms and building rules onto those platforms and pave the way for more efficient cross-border payments. And that's a call for institutions. As they say, the CPMI chair says, we are all starting on a clean slate. We don't have to bother about the legacy systems. And this is the time to act, and this is the time to do. And but clean slate means that there is also an expiry date by which we should act. So we are pretty hopeful and sanguine that this is something which is doable, possible. I think the technological solutions are the easier part. The difficult part is to get the governance framework in place. So I am very optimistic, and with IMF and other international organizations cooperation, we can do it.
Wonderful. Thank you so much. Thank you so much to my panelists. I thoroughly enjoyed this discussion. I think we could have gone on and on. You have an incredible discussion coming up. Big thank you to beautiful Singapore for hosting us today and to the audience for listening. Thank you.